All right, most people think that Bitcoin is too risky. They ask their friends, their family, or their financial advisors. That's probably what they tell them is only buy Bitcoin with the money you can afford to lose. But we got an opposing thought here, and it comes from Michael Saylor, who says only buy Bitcoin with the money you can't afford to lose. So we're going to dive into that today a little bit further. We're going to start with the man himself, Michael Saylor, and let's see what he has to say.
What I say is only buy Bitcoin with the money you can't afford to lose. I'm not going to equivocate. You shouldn't equivocate. People that equivocate don't understand Bitcoin, and they still don't get the idea of perfect money.
That's just it, right? It's sound perfect money. It's the first time we've ever seen this. We had gold beforehand. Gold had its problems. That's what people don't realize about, sound money people that are into gold. They don't realize that fiat was an improvement on gold. The paperization of gold was an improvement because it was more transferable. So, and fiat again then has its problems because it can be just printed ad nauseum. So, Bitcoin is perfect money. And when we recognize that, we don't have to go into the casino of the market or to invest in technology companies, which all of those crypto companies or crypto tokens, if they're not just straight up scams or vaporware, they are technology companies. We don't have to do any of that. We can choose to do that, but it makes a lot of sense to just have Bitcoin as your savings, as the vast majority of your money.
I think it's also really risky because let's say, for example, if people don't understand Bitcoin, they hold, let's say, the S&P 500. Over time, the S&P 500 is getting devalued in terms of Bitcoin. So even if you have, let's say you have $1 billion worth of wealth today, let's say you can buy 1,000 or 10,000 Bitcoin. Eventually, you're going to be able to buy 5,000 Bitcoin. Then you're going to be able to buy 2,000, then 1,000. Then you're going to be down to 500. Even 1,500 sounds a lot. But if you've lost 90% of your wealth because of your arrogance, because you just don't think Bitcoin is anything for you to worry about, you're going to feel really stupid over time. So not owning Bitcoin is extremely risky because your Bitcoin denominated wealth is going down. And I guarantee you that it's never going to come back because you're basically valuing this Bitcoin in terms of a piece of paper, something that can be printed out of nothing. You expect that the value will keep going up of that piece of paper when in reality, anybody can print that piece, or not anybody, banks can print that piece of paper. They can add it to the economy whenever they want to. Anybody can go to a bank and they can borrow as many pieces of paper as they want. They can buy, let's say, real estate. They can buy stocks. Nobody can print more Bitcoin. So no matter what happens, even if you have a ton of real estate, I think you're going to do okay in terms of fiat, and that's perfectly fine. But why would you want to increase your purchasing power in terms of fiat when you know for a fact that there's more fiat that's going to enter the system? Why would you want to hold your fiat? Why would you want to hold something that only generates fiat?
I think it's important to look at the hurdle rate, which a lot of people, as soon as they hear hurdle rate, their brain usually shuts down. I can attest to that myself. The first 100 times I heard hurdle rate, I was like, what the heck is a hurdle rate? But I think if you actually look at the historical performance of these different assets and you start comparing them, I think you'll see that even if you're making money in real estate, even if you're making money in your stock account, you're actually losing money compared to Bitcoin, because regardless of where you're allocating your capital to, unless it's outperforming 60% year over year, you're losing. So even though you're sitting there, you're logging into your investment account and you're looking at the balance go up. And, historically it's been about 8 to 12, 15% on a good year, but you're losing 35 or 40% or more, actually 45% to Bitcoin. And I just think that if you look at the incentives and why that is, like why people think that this is such a risk to invest in. And I think going back to what Saylor was talking about there, he said basically anybody who disagrees with that doesn't understand Bitcoin. And so the people who are telling you that Bitcoin is too risky, consider how many hours they've spent looking into this thing. Because I can say for myself and my experience here that the longer you spend in Bitcoin, the more conviction you have over it, and the more you allocate from your existing portfolio into Bitcoin. And you listen to somebody like Michael Saylor, who has literally spent tens of thousands of hours. He's an engineer. He's put his money where his mouth is. And so to me, if you're following kind of the advice of the old system, people who haven't spent a whole lot of time learning about this, you're never going to catch up. You're going to be continually left behind with how you're storing your time and energy.
I think something really crazy here is you said tens of thousands of hours. Some people are probably going to say, oh, he only got into Bitcoin in 2020, but his education before that contributed to those tens of thousands of hours. Without the education before that, he wouldn't have gotten to that point. And I think that's key to remember because it gives everybody a different perspective. If he's saying that Bitcoin is not risky, and then there are other people with different perspectives, different backgrounds saying that Bitcoin is not risky, it's something that you should look into, like at the very bare minimum, something that you should look into, something you shouldn't ignore.
Yeah. Well, when you first look into it, it seems like a ridiculous idea that there's this money that's created. You don't know who created it. We don't know who Satoshi is. Those are the kind of the first things you start to learn about when you look into this, and immediately you're like, oh, this is a scam. This is just another scam, right? But the more you look into it, you start to realize, oh, proof of work makes a lot of sense. The issuance makes a lot of sense. That those coins of Satoshis have never moved. That's like a honeypot that shows just how secure this network is. It's the most secure thing ever created. The Lendy effect of this blockchain having gone on for the longest amount with immutability, you start to understand that these things are really valuable when it comes to a monetary system. And then you start questioning the monetary system we have, which is something we don't do as we grow up. We just, you put your card in, you get your money out of the ATM, people accept it, you accept it, you value it. You don't question what money is until there's something that makes you do that in your life. But then, as you go down this rabbit hole, you start to think, okay, at first I thought Bitcoin was a scam. Now I realize fiat is a scam. And it just goes full circle.
Yeah, and I think that you mentioned the honeypot there. I like thinking about when we're thinking about who's coming into this space, who's here now, how far it's come, and who's coming into it. I think that right now, specifically, it's so clear what's coming here. And what I use for this is MicroStrategy as an example of that. Because if you look at what MicroStrategy is right now, it's a lot of things. I mean, they got a lot of different tools. There's a lot of different opinions on it. That's okay. But if you look at from a big picture view of this, what is it? It's the easiest highway for this big capital to be purchasing Bitcoin. The central banks, there's two central banks. I think one is Swiss National Bank, one's maybe Poland, but they're buying a lot of MicroStrategy shares right now. And you have to ask yourself why. It's because they actually can't buy Bitcoin yet. A lot of these big funds, these big entities, they have certain rules and regulations in what they can actually invest in. And the majority of them, Bitcoin was probably after a lot of these agreements and regulations were written. So they're actually not able to hold Bitcoin yet, but they're going to be able to. And what they're doing right now is they're essentially using MicroStrategy as that highway. And so just like objectively look at that and say, okay, there's all this capital that's trapped here. It's trying to access Bitcoin. MicroStrategy is the best way to do that. So I think that MicroStrategy is kind of like the canary in the coal mine for anybody who's paying attention to this right now, saying this money's coming. It can't easily access it yet. And they're willing to pay 2x pretty much, or 3x, depending on where you look at the time frame here, to buy MicroStrategy. And so for the average person seeing that, I know that it's kind of hidden very well from the mainstream stuff, but to me that just shows like what's coming here. And you still have the ability at this point to front run those people. And I think that's a pretty big deal for the average person.
I think it's so crazy what you were saying there. The fact that so few people understand Bitcoin, and then even fewer understand MicroStrategy. There's probably what percentage of Bitcoiners do you guys think understand MicroStrategy? Maybe less than 5%.
Yeah.
What percent
probably.
of Bitcoiners understand Bitcoin?
That's true. That's a good point. Most people who own Bitcoin don't understand it. Yeah.
And to me, that just shows just such a huge opportunity here because, we've seen this asset that's gone from $500 to $10,000 to now $100,000. And some people that I've talked to in real life and, in my dealings online here, they think that, it's gone. The opportunity's gone so far
Yeah.
because it's hit 100K. It's increased so much in the last 15 years. But if you look at both how many people, let's say that there's 1% of the population on Earth who owns Bitcoin right now. I would say like 5% of that 1% actually truly understands Bitcoin. And so even though it's gone up significantly in the last 15 years, that just shows to me like what's coming here and how much, you know, the other 99% or 99.9% of people have to still figure this thing out. And that's kind of the disconnect here. It's not whether who's right or wrong, it's who's actually put in the work to understand this and who's understood the fact that actually, you know, Bitcoin's not the risk here. Owning any other asset that doesn't have anything, you know, behind it, that's the risk.
Yeah, if you look at like, you know, I think Bitcoin is the most asymmetrical bet, right? We can see that there's an adoption curve that's happening, and we can see, I think the big thing with Bitcoin is the ultimate scarcity that it has. There's nothing else like that. Any other coin that has a supply cap could be changed. Bitcoin could not, right? So we can just say that it has ultimate scarcity compared to anything else. And these other, we have a nominal bias. We look at Bitcoin, we say, oh, it's 100,000. That's kind of expensive. If you look at it compared to other asset classes, Bitcoin is what, $2 trillion? Gold is like $18 trillion. And not that many people even care about gold at this point, right?
What do they even use it for at this point? Gold.
Like
Sitting there.
jewelry and industrial, and then
Yeah.
it has a monetary premium on it on top of that for some reason
Yeah.
at this point.
Most of it's just sitting there.
Most of it's just sitting
Yeah.
there, exactly.
Yeah.
And that's not even the big money. And once you start looking at the size of the real estate market globally, the size of the bond market, like people think the stock market is big. The bond market is even bigger. And if you think about the ultimate scarcity and the adoption curve, you see that money has to come from somewhere to go into Bitcoin as more and more people get into Bitcoin. So again, coming back to the risk of not owning Bitcoin, right? If money is getting sucked out of all of these other assets, then the value of those go down in nominal terms, and the value of Bitcoin is going to go up because it's taking in all of the capital or some of capital from all of these different assets. So again, you don't have to go all in like us, you know, but it's like Saylor also has this other quote about saying like, you know, 2% of your portfolio into Bitcoin is, you know, flooding insurance. It's like, it's an insurance policy. It's not really going to get you ahead, but it's not going to leave you behind either. And I think that's probably where a lot of people need to start. And that 2% is going to grow because of the value of the Bitcoin is going to go up, but it's probably also going to grow because they're going to get more conviction and understanding of what this asset is, and allow that to grow without rebalancing, or to actually start allocating more to it from their other assets.
I think the other risk here is, what if people stop accepting dollars? Like, what if they just all those things are important. What if your other assets get devalued? You hold a bunch of real estate. Let's say you hold a $10 million real estate portfolio. That's fine. You still have that real estate. You're going to keep getting that cash flow in terms of US dollars. But what if your merchants don't want dollars anymore? Like that's where I think that's the scary part. And then what if your tenants don't have Bitcoin and they stop paying you? What are you going to do at that point? It gets more and more scary if you don't own any Bitcoin.
Yeah, it gets crazy. I mean, that's the inevitable future that I see. And I see Bitcoin's global adoption happening when people start refusing fiat as payment. That's going to be the game changer for Bitcoin. And that's when you really get left behind. You need to start getting paid in Bitcoin to actually acquire it, because you're like, who's going to be willing to sell you Bitcoin for fiat at that point?
Yeah, it's the scarcity aspect for me, kind of what you're alluding to there for us. It's an asset that you've heard the expression like all models are broken here, because they truly are. We've never had an asset that has perfect absolute scarcity before. Like, we know how much there is today, we know how much there's going to be tomorrow, and in 100 years from now. So it's verifiable, it's predictable, and that's the big thing for me, is the scarcity. And I don't think that we've actually seen the scarcity aspect of this, because as long as I've been in Bitcoin anyways, there's always been like, 2 million coins on the exchange that are available that you can buy and sell easily. At one point, I think it was 3 million, but now it's kind of down below 2 million. And I think that as the rest of the world, as the other 99% of people start to arrive here. And that 1.5 or 2 million coins that are actually available for Bitcoin to own here, you got millionaires, you got billionaires, you got countries, you got state pension funds, you got states themselves. All of those entities are going to be fighting over that last 2 million Bitcoin. And I think, as you guys alluded to, will people always accept fiat? Because you're looking at something that's completely illusionary and fake and can be created out of thin air versus something that requires actual real world energy to create more of, that has a finite supply of it. So do you guys think in our lifetime we're going to see a point where people no longer accept fiat dollars? Because we have to keep in mind here that there's a difference between fiat dollars and dollars. Because if the US came out tomorrow, if Trump came out tomorrow and said, we're shifting away from the Federal Reserve, I don't know the logistics of this or if it's possible or whatever, but if he said we're shifting away from the fiat Federal Reserve note and we're actually going to create our own US Treasury dollar that's backed by something, those are two different things. Because the fiat dollar is actually backed by nothing. But if a country came out and said we're either backing with gold, we're backing with Bitcoin, we're backing with energy of some sort, those are two different things. So let's focus on the fiat. Do you guys think that there will come a time in our lifetime where people stop accepting fiat for their time and energy?
Doesn't BRICS want to have their currency backed by gold or something, or like a basket of currencies?
Yes, something like that. But that would be something where it's different than what we have now, because it would actually be backed by something that's scarce and finite.
So that just means automatically there's competition for fiat. I mean, if something is fake versus real, like if something's backed by nothing versus something is backed by something, then of course you're going to want the thing that's backed by something, right? You're not gonna want the thing that's backed by nothing because more of it can be created at will.
To answer your question, Jor, I do think that in my lifetime, in our lifetime, that we will see fiat not being accepted anymore for
Yeah.
Bitcoin. I think so.
I think so too.
I mean, why? I mean, right now it's literally just because people don't know any better. That's really what it is in my opinion.
Absolutely right.
Yeah.
Absolutely right. And it's kind of wild to think about that. But so from my perspective, I agree with you, Forrest. I think that we are going to see it probably sooner than later, honestly, sooner than most people think. And I think so what happens then if people stop accepting fiat dollars, it's obviously going to hyperinflate. It's going to, you're going to have to trade a lot of your dollars for whatever you want. So I think when that happens, we're going to come to a point where you can either trade your time and your energy, to earn Bitcoin for whatever value you provide to the world. You get paid in Bitcoin. So you're trading your time or your energy, or you're actually going to have to trade real assets for it, which would be something like gold, something like real estate. I would consider to be a real asset, land, stuff like that. That's the only thing I think that people actually accept if they're willing to part with their Bitcoin.
Yeah. So even right now, right, we look at Bitcoin, we value it in the unit of account of US dollars. So I think what will happen is that will reverse. I mean, US dollars or fiat in general just won't be the thing that we compare it against. It will be Bitcoin compared to oil, Bitcoin compared to kilowatt of electricity, of ounce of gold. It will be, that's the moment where it becomes unit of account, and we value all other resources against Bitcoin. And then Bitcoin becomes stable in that moment. And all the other things fluctuate against Bitcoin, which you can already look at it that way, but will become commonplace to look at it as the unit of account.
Yeah, even right now, Bitcoiners see whatever they own, they see their wealth in terms of Bitcoin.
Yeah.
I see, let's say, for example, if I were to buy a car, I'm not going to think $25,000. I'm going to think more a quarter of a Bitcoin. Over time, it's getting more and more obvious, more and more. I'm getting more used to it.
Yeah.
But over time, it's just a language, right? It's like you're basically speaking one language when you talk about dollars versus speaking another language when you talk about Bitcoin. Over time, that language gets more and more adopted. More and more people will get used to it. And 100%, I completely agree with what you were saying there, Jor. I think that we are going to move away from the fiat dollar. I don't know why we haven't already.
It's because we're still early.
Yeah.
Yeah.
I mean, Bitcoin itself has had 16 years of negative marketing against it from the people who don't want Bitcoin to be a thing. Because when you truly understand Bitcoin, that's pretty much the only option that they have of trying to stop this thing is trying to convince people that It is risky. It is a bad thing. It's bad for the environment. It's used by drug dealers. We've heard it all. But I think that people just really need to realize that this is where we are right now. The opportunity is still there. We're, as time goes on here, that the window for opportunity is going to start to close. And I think we are a little bit away from like people not trading fiat dollars for Bitcoin. I don't know how far away we are from that, but the window is closing. And I think that we're going to come to a point here within our lifetime for sure, because today you can buy, if you had $1, you can buy 1,000 Satoshis for it. And I think that we're going to get to a point where it's going to be $1 for 100 Satoshis. And then it's going to be $1 for 10 Satoshis, and then $1 for 1 Satoshi. So the longer you wait, the more time you spend trying to figure out this thing and sit on the fence and make sure you have a good understanding of it before you buy some of it. I would say just get some, because there's going to be no better time than today to just get as much as you can of it, and then worry about it after. Get some, continue learning, learn how to store it properly, and just be a part of this. Have a seat, I guess, in the arena while this whole thing plays out.
When you do have,
I was just going to say, I think if you can get to 1 million Satoshis, whatever it's going to cost you today, it's going to cost you multiples of orders of magnitude more, like 20, 30 years down the line, right? Like that Bitcoin, if you're having a kid, let's say, and you just want to give them a gift for the future, I would say don't even save in a retirement education savings plan, an RESP. Just buy them 1 million sats.
Yeah. It's I was going to say another thing to something, Jory, you mentioned, the age of Bitcoin, 16 years. 16 years is a very short time to try to change the monetary system. Like Bitcoin has come a long way into a large effect and created a ton amount of change. Like the Overton window of politicians talking about this, the crypto czar. There's a task force to look into Bitcoin in the US government, like all in 16 years. And this is a real threat to the monetary system. And they have to figure out, how can we subdue this threat? How can we make it so that people adopt stable coins so that we can still issue debt and treasuries, and the dollars, we can, spread that around the world. Like this is all in, like, they're starting to realize, like, they're kind of treating this as like almost like an emergency. Like we need to get a handle on this thing so that we can slow down the adoption of Bitcoin. That's kind of how I see it, to be honest. And you just want, again, to get some now. The other reason you want to get some now is because that will make you more interested. As you see the price fluctuate up and down, you'll be more interested in studying it. If it's just some hypothetical thing that you're looking into in Bitcoin, you hold none of it, you really have nothing tangible to relate it to. It's just like a intellectual exercise to look into Bitcoin. You're going to be less connected to it than if you actually own some. So I'm not saying fully port, go all in, although that, isn't the worst advice either. But I would just say, get some, start to study it, and build conviction, because that's what will happen when you study it, is you'll gain conviction in this amazing asset.
I think 1 to 5% is probably a great start for most people. Even if you can get 1%, you're better off than somebody who has 0. That's where off 0 comes from.
Off 0.
That 1% is eventually going to be 99% of your portfolio.
Yeah, I think that just kind of where we are right now in the cycle, like a big thing within Bitcoin is the halving cycle, where the new supply gets cut in half every 4 years, or approximately 4 years. We're kind of at the point, now where if you look back exactly 4 years ago today, in February 2021, we went from $8,000 Bitcoin to $60,000 Bitcoin within 2 months there. So that's where we are right now. That's an 8x move, and Bitcoin moves fast. So that was before the public companies were here. That was before the states were here, the countries were here, the BlackRocks were here. All that 8x 4 years ago today happened. So I expect something similar. And I do think that right now, before that happens, because Bitcoin essentially moves a couple days every cycle, big time. And if you got cash, if you got other things sitting on the sidelines and you miss that, that's a life-changing thing for your family. So just take this seriously, act with a little bit of urgency, and just get some, because the most risky thing that you can be doing right now within investing is owning 0 Bitcoin. I think that's the moral of the story today. So any last thoughts, or should we wrap this up, fellas?
No, it's great.
Good.
Okay.
That's great.
Well, thanks for watching. Hope you're enjoying the channel here. Make sure if you're not yet, consider subscribing to the channel. We want to keep doing this and spreading the good word of Bitcoin. So thanks, boys.